All right, it's Thanksgiving week, and we know interest rates are going to be part of every family's conversation. So we want to be part of that. And so I'm excited to be here with our great partner of ours, Sam Scher with Origin Point, and we're here to just be part of your conversation.
Here we are at your table.
I love it. Welcome.
Thank you.
I'm so glad you're here. So before we start talking about kind of what's going on, give us a little summary of 2025 and kind of what your perspective is.
I had thought 2025 would be similar to 24, slower year, but this year's actually been a really good year for me. And a lot of people, thank you. A lot of people have been buying homes. A lot of people have been finding that perfect home on the block where their daughter lives, and they have to get it. And we're able to help them do that, right? A lot of people, I think since COVID, are finally ready to move on from their really low interest rate because the house doesn't suit them anymore. Whether their family's too big or their family has gotten smaller, it's time to move on.
So they ripped off that Band-Aid.
Yeah, and they're just moving forward.
Good, good. So there was just a lot of talk about interest rates coming down 4 or 5 times this year. How many times did they actually come down?
And how big of a percent? 3, right? I think 3 times.
Okay.
About. Yeah, I want to say 2 or 3 times. It's been about a quarter each one. So we're talking about 0.5%, 0.75%. But that is really not on mortgage, right? The Fed dropped interest rates for home equity lines of credit, for credit cards. But mortgages are always on the daily, moving up, moving down, depending on so many different factors. And even when the Fed recently dropped rates, mortgage rates went up that day because they said we're dropping rates now, but we might not drop them in December. So then that just made mortgage rates shoot up. So we're still in this very strange environment where it's very okay, every day could be something new and it may make rates go up or down. But I think most of the buyers right now are not really focused on rate. They know eventually they'll refi, hopefully, next year. But right now, they're just focused on getting the house.
Well, and it could just be that interest rates are in the low to mid 6s. So we've seen a little bit of a drop from last year.
Right.
But more importantly, there's more houses for them to choose from,
yes.
right?
Yes.
And so they kind of feel like they can negotiate a little bit.
100%, yeah.
And in part of that negotiation, are you seeing seller buy downs to helping them buy loans down?
I have never seen so much as I have this year. Sellers paying for closing costs. I mean, that on $1 million house could be $30,000.
Wow.
Have you ever, a seller doesn't ever give up money. Typically, there's a line of buyers waiting, and the buyers just have to pay the highest price, the one that wants it the most.
Well, that was 20
that
to 22.
was years ago,
that
right?
Was
now, you might wait, you might get one offer, right? And the buyer might say, all right, this is my offer, and I want you to pay my closing costs, and I want you to pay my interest rate to buy it down. And sellers are willing, way more than I've ever seen, to do these things.
Well, we have to get more creative, right?
Yes.
So we got to work with people like yourselves or our team or whatever to be a little bit more strategic for people today, because I don't think the average buyer probably knows that.
No, they're not buying every day. We're doing real estate every day.
Yeah, so I love that. I love that that's available. Government shutdown, did that have any impact?
Not really. It's kind of like a blip, not much.
And do you think with it opening up again that we're going to see interest rates go back up?
This week, well, I think it all depends with the reports that have just been sort of blacked out right now. Yeah. So as more and more comes out, we'll see what happens, what the Fed decides to do in December. So that I think will affect the Fed rate drop in December if it's going to be back on the table again.
But we're still probably going to be in the 6s. Probably.
Yes.
We're not going to see anything.
We're not going to see 5s. I'm hopefully next year we'll see 5s.
All right. So 50-year mortgages. I got it. It's going to be a topic of the conversation. So let's add it.
Okay, that sounds good. I think it's going to be part of an SNL episode, right? We're going to be 100 years older. We're going to do a 100-year mortgage soon.
Well, they do them in Japan and Europe.
Yes,
they have them.
Yes, that is true. Yes, they do.
Yeah.
So a 50-year mortgage, it just takes that mortgage and spreads it out, right, over 50 years. And I did some numbers on it. $1 million house, 20% down, right? Your loan amount's around $800,000. On a 30-year mortgage, your payment at a rate of around 6.5 would be about $5,000 a month. Okay, fine. 50-year mortgage, the payment would drop to $4,500. So it's not a huge savings where, $1,000, $2,000, that makes sense. And the other thing about a 50-year is that, let's say 10 years from now, you buy this house on a 50-year mortgage and you're ready to sell it. You've only paid your mortgage down by about $30,000.
Ouch.
versus a 30-year mortgage where you've paid it down by 120.
Oh my gosh.
So when sellers come to you and say, okay, Lydia, I'm ready to sell. I'm sure I have X amount of equity in my home. Somebody who has a 50-year mortgage is going to have a lot less equity than they expected.
Yeah, because I think most people are buying homes in California for home equity to gain appreciation.
Appreciation, not necessarily paying the loan down. And you would get the benefits of a 50-year mortgage of, being able to write off your mortgage interest and your taxes like normal.
But there's a limit.
Yeah, absolutely. So, but it's just funny it's out there. We have had the 40-year though for quite a long time. And I do sell the 40-year occasionally, maybe twice this year, because sometimes it helps someone qualify for that little bit bigger mortgage. Or if they're buying a home before they've sold their old one, they want to make that new payment as low as possible. So it's just sort of like a tool until they end up refinancing to a 30-year mortgage.
Again, you need somebody creative to really look at it all and say, does this make sense? But overall, your feeling is...
Oh, I don't think it's a good idea. Yeah. I worry about all those people that are not going to have paid their loan down, right? And we're going to be in our 90s and still have a loan to pay.
Yeah. And it's not worth the savings.
No, I do not think so. But I think it's good press.
Yeah.
It's good conversation.
And it's a great conversation. It's super fun, for sure. All right. We all know Paul's coming to the end of his term.
Yes, May.
So what is your crystal ball saying for 2026?
Gosh, I hope I'm right. But I think this is a Trump-appointed Fed president. And so I would think he's going to have a lot of pressure on him to drop rates pretty quickly. So I'm hoping that by summertime, we'll see some lower rates. Maybe we'll see some 5s again.
Which, do you think that'll make that much of a difference?
I think it's going to get people out. I think what's going to happen is people are going to hear that the Fed's cutting rates, and it's going to get more buyers out. And then there's going to be more competition. Home prices are going to go up, right? And you're not going to be able to get those credits that we were talking about that sellers are giving because there's going to be a lot more buyers making offers on one particular house.
So January through May, kind of more of the same. More of the same. Be creative.
Right.
Probably going to see good inventory out there, just like we've been seeing.
Right.
Interest rates kind of stable.
Exactly.
And then May, new appointee.
Right.
And pressure.
Yeah.
So end of
Hopefully
summer.
we see. Yeah.
And
I think because mortgages always anticipate what's going to happen, I think when the Fed's new president starts, I do think rates are going to start to come down just on their own without him doing anything. So hopefully.
Yeah.
Hopefully my crystal ball is perfectly clear.
I love it. And then one last thing, there was an announcement a couple days ago about the FICO scores.
Right. So the big government agencies who fund most loans out in America are removing their minimum credit score requirement. So it's typically a 620 minimum score. And now what they're saying is there's no score and you can use alternative ways of credit. Like if somebody doesn't believe in credit cards, but they've always rented and they've always paid their utility bills on time and things like that, we can use those as credit to help them buy a home. Now, the one caveat is, let's say you have a really terrible score, right? But there's no minimum score requirement anymore. The automated underwriting system. So even though there's always a human behind every loan and making sure every I is dotted and T is crossed and guideline is adhered to, the automated system still has to approve the loan. Oh, so I find...
You don't think they're going to get rid of that?
No, it says it still needs the automated approval.
Interesting.
And sometimes even people who have 640, 650, which at the moment is above the minimum score of 620, do not get the automated approval. So oftentimes what we do for people like that, and if maybe you don't have a great credit score, adding a cosigner can make a huge difference with those automated underwriting systems.
So again, going back to creativity.
Yes. Always.
And anybody who wants to buy can buy. Mm-hmm. Home ownership's still important.
Yeah.
See
and
the
attainable.
Average age going up.
Yeah.
Mm-hmm. Average age went up. So maybe this will help.
Yeah.
Right? Mm-hmm. So always a pleasure having you here.
Thank you.
I think she's a wealth of knowledge. If anybody wants
Lydia.
to get a hold of her contact information will be below. And of course, follow us because we always love bringing you up-to-date information.